welcome to AMFX. My name is Ashish, and this is going to be the first daily review. As I've committed before, my plan was that I would be making trade reviews every week, and clearly that is not going according to my plan because the reason is that I'm not able to keep track of all the trades that I'm taking throughout the week. Even if I keep track, I am not able to completely recall the logic with which I'm taking those trades. And it's not less number of trades I'm taking within a week. The number of trades have been increased as days went by. And these are some of the screenshots from the previous week. This is precisely from 2 weeks back. So it's from 30th of July. And all you can see is that the pretty much the first week of July was a disaster. All you can see is red because I was transitioning my style of trading to optimize it for Indian markets, and I didn't want to burn myself out trading throughout the day in Forex and Indian markets. Since Indian markets were going well, all I wanted to do was I wanted to create a sustainable system within Forex so that I can go long term with that. And that seems to be working, as you can see in the following screenshots, because I have precisely come up with a timing at which I'll be trading the Forex. I am not going to be looking for opportunities all the time in the markets from now on. I'm going to be trading only during London Open and New York Open, and specifically in GBP and Euro and US indices, S&P and NQ. Probably won't be trading in gold as much as I was trading before. But if some opportunity comes up, I will definitely be taking a trade because I do like gold. It doesn't require much of a lot size to go with the risk. There are a lot of good advantages in gold, and also the liquidity is great. And obviously, I want to keep my edge in gold. I don't want to completely lose the sync I have with the gold chart. As you can see, the first week of July was a total disaster because this was the transitioning phase. Because the weeks before this was a complete disaster. I was up almost 4.5% in the account, and that drastically went down. Then I was at a point I was around $2,000 in the hole from the starting balance, and that wasn't great because I took a lot of BS trades. There was no logic, nothing. If you can go back and look into my weekly reviews before this, you'll be able to know that there is literally zero logic in whatever trades I took there. But since I did all that mess up, right now I came to the realization that I have to streamline my trading process. The system is good. There is nothing wrong with the strategy. I don't want to give a wrong idea. I didn't change my strategy any bit. I still trade based on liquidity. I just pin down on the timings where the maximum amount of volatility can be expected. So this week was just transitioning. I did trade in bunch of random times. These trades, these GBP and S&P trades were during New York Open, but still it didn't play out well because I was kind of panicking during this point of time because I was in a hole, and because of that my psychology was taken a hit, and this happened. But the week after that, I did bunch of back testing and kind of fix my strategy and optimize it to trade during this period of time. And the result of that is the current 2 weeks. Yesterday was a fantastic trading day because it was all green, and it put me up almost clearing my account. I think the 5%ers doesn't actually look into completely, they I don't think they take commissions into the count, because as you can see here, all I need right now is some level of profits to completely clear the account. And sorry, yeah. And over here you can see that clearly I haven't reached that yet because I still need around probably $1,000 more to clear it, $1,200 to be exact, to clear it. And this is where we are at right now as of tonight. This is the last trade I took. Today there was some mess ups, we'll get to that now. But the point is that from now on it's going to be a daily review because I think that's going to be easier on me, and also it's going to be useful for you because I will be very clear with what logic I'm trading for the day, and I won't be missing any information out of it. So let's get to the trades. I'll be going through today's and yesterday's trade. First one was GBP. So as of yesterday, these were pretty good liquidity points for GBP. And I think this one, right? Where is it? Yeah. So this is the Asian session. The line before this is London Open. The basic trade logic was that it hasn't taken out the liquidity yet, but the market was slowly moving towards that. Asia has already set up a downward moving trend. So the possibility of London doing is probably an accumulation or a manipulation to this side and directly distribute. But London was actually an accumulation going forward. My trade was based on a 2 minute time frame. Yep. So this was the liquidity I was observing, and this is a textbook setup. I've actually traded one of these setups in my previous videos. I think it was in Bitcoin. You can actually go and see that. It was a bullish setup in Bitcoin, and this one is just a bearish one. But the logic is the same. My short was exactly on this order block. My assumption is that it's going to tank, and that's exactly I wanted to play. This right here was buyer trap. This was a buyer trap. This was an ORB setup which retailers usually trade, and this was a proper buyer trap to get some people in that. I don't think I traded this much. I traded till Asian lows. Yeah. My first take profit was, this is annoying, man. Every time I have to go back and check. Yeah. My first take profit was right here, right when it touched these lows, and I booked complete. Booked it all over here. It was a full TP, and it was an excellent trade. It was a 1 is to 5. I risked around $450 for it, 0.75%. And today's trades, let's get to. There were a bunch of more trades. 1 second. Yeah, it was NASDAQ. Not in. Yep. NASDAQ was an excellent setup yesterday, to be honest. It's one of my A plus setups. I didn't risk much because I already got a good trade in GU. So I was like, why should I risk much? I'll just go with the normal risk and see what it's going to give. I think somewhere over here. Yep, it's this one. So this was the liquidity that I was observing. And I think exactly during, that was London Open. And this was New York Open. Yep. So Asia set the range for the market. This was the liquidity I was observing. The market took out the liquidity during the London session, and I was looking for a retrace back to this fair value gap. I just wanted a 1 is to 2. I didn't want anything more. My trade was right from the fair value gap. I think I targeted somewhere over here. I think my risk was a little bit more. Yeah, I think it was exactly 1 is to 2. Yeah, this was the trade for NQ, and it was so quick. I didn't have to wait much to for this trade to play out. It took my fair value gap, tanked right the next minute. So it was a quick one. This was the second trade, and the third one was in Euro USD. Euro USD was showing signs of bearishness, and I just wanted to take a quick scalp out of it. Basically, my logic was that these are the liquidity points in Euro USD, the lines below. And GU has already given some sort of recovery for the day, and Euro USD wasn't going along with that. As you guys might be knowing, these are correlating pairs, which means that when Euro goes up, GBP goes up, when Euro goes down, GBP goes down. So my logic was that when it's showing some signs of reversal, I'm going to take a shot to these liquidities. And that's exactly what I did. The first trade I got in before I got the signal, and that's why I took a loss of $450. But after that, I got the confirmation, so I entered again. And I'm glad that I went in with my complete risk so that I was able to capitalize well on that. It's lagging a bit. Come on, man. Why isn't it? Okay? Yeah. So, basic idea was that took out all these low resistance liquidities and it was going towards the downside. My first trade was somewhere over here. Yep. The thing is, I actually have set a alert over here to take the trade once it closes below because I wanted the market structure to shift before I take the entry. But what happened is that it gave bunch of bearish candles, but nothing really happened. Gave a bunch of bearish candles, reversed from zero point 0.7 and took my stop loss. This was a buyer trap, and after this, the moment it closed below, I entered exactly there. I entered in this retracement. My risk was here. My take profit was right here. This was a 1 is to 1.17, and for this I went with $400 of risk, $450 of risk. And when this retraced at zero point 0.5 level, I think it's somewhere over here. Yeah, I went in with another $200 of risk. So this cumulatively paid out $1,200, which is around 2% of the account. And this was the last trade of yesterday. So yesterday was a great day for me in terms of trading, and today was actually not bad, to be honest. I did take an L today, but it's okay. At least I didn't go much deep into it. I spiraled a little bit, but I was able to get myself back together up. Today's trade was again an EU, which kind of failed. The first trade was that I was targeting towards, wait, not this. I have just marked this to observe. Yeah, actually, I didn't trade EU today. I traded S&P. Let me show. So my idea was that S&P is going to take. I didn't see much low-level liquidities. I observed this later. Once my NQ stop loss was taken, there was actually a bunch of liquidities to the downside. I was more interested in trading NQ, but what happened is that S&P gave this huge spike up from this point, which looked very convincing for me. So at this point, there were a lot of low-level liquidities towards the upside, and this is Asia highs. My assumption was that I didn't see this particular liquidity. This is usually a strong liquidity which will be taken out. But what happened is that I saw a bios trap right here, and then it gave a fair value gap. This is where I was convinced that okay, it's time to go long. My entry was at zero point 0.5. Yeah, zero point 0.5. This was my entry. and my target was Asian highs actually. Yeah, but then it didn't play out. I took my stop, and it finally took out that liquidity too. But I took one more stop loss in S&P when somewhere around here, I think so. Yeah, actually, I sold here. So it hasn't taken out this liquidity, right? So I was aiming for that liquidity to be taken out. So what I did is that I shorted right here at zero point 0.5 again. And my target was this liquidity, which didn't work again. So cumulatively, both trades totaled up to a $900 of loss. And I took a trade again. I wait. Yeah, I've taken three losses in S&P today. So that is basically one, two. These two are a loss, and I've taken one more buy, which was a loss. Yep, this was the buy. So this was London low. So right after London low was taken, it again gave a spike up. My entry was again at zero point 0.5, somewhere around here, targeting previous liquidities. Didn't work out. So three trades back to back stop loss in S&P, which got consolidated by the NQ. I was more interested in trading the NQ because of this reason. What NQ did in the past days is that it took out all the low level liquidity towards the downside. So these are all low level liquidities, and there is this massive fair value gap. Now, it's a very clean fair value gap. These are the kind of fair value gaps I actually like because it's very well formed. The all three candles are of singular direction, and the gap looks very solid, and it's creating a breakout from the previous structure. So these are very valid fair value gaps, and it has bounced right from the fair value gap. My assumption was that it's going to take some liquidity during London, and it's going to hover around a bit during New York and eventually go up. It did hover around more than I expected, and that's why I took bunch of stop losses in S&P because S&P looked a bit more stronger than Nasdaq at that point. But clearly, Nasdaq was determining the direction of to trade. So what happened is that, if you can see, in a higher time frame, it's creating, what you can see is that it's creating a very decent head and shoulder, right? So I want to capture the bottom of this right shoulder, and that's exactly what I did with the Nasdaq. So the trade was that S&P manipulated me thrice. So at this point, when I'm watching Nasdaq, S&P has taken out these liquidities and it has given a reversal. So I was more interested in Nasdaq to give such a spike and then for me to take a trade. So what Nasdaq did is pretty much the same. It gave a buyer's trap, got all of them, and again it's trying to do a seller's trap, right? Sorry, did a seller's trap, did buyer's trap, and again it was trying to move towards the upside. Let me see if I'm seeing, yes. So my entry was based on 2 minutes. This is what I was interested in. My long position was somewhere right here, and my exit was somewhere here. My target was Asia highs. This came very close to my stop, like truly close to my stop, but it didn't take it, and eventually it went to my take profit, which was pretty nice. Yes, and then it started reversing a little bit, but yeah, it took Asia highs and reversed back. But this again consolidated, gave me around $1,000, which consolidated a couple of my losses which I took throughout the day, and I already had a trade in the morning, so I'm good. I am just down $450 for the day, but apart from that, everything else is good. This is how my trading day went for the past couple of days, and I hope you are able to learn something out of it. And if you want to learn something specifically out of these videos, just put down the comment section and I'll be getting back to you on those. Okay, so as of now, peace.